All right, welcome everyone. This is Bob Mauer. It is Friday, the 23rd of August, around about quarter till 2 my time. I want to do a review of the current seasonal futures spreads strategies. Let's take a gander at how things are evolving with the ones we've been watching for a while, and then also I have one new one to introduce. So let's hop on into it. If you dial into the portal, you'll see the most current PDF version right here, uploaded just a bit ago. And this will be going into next week, the week of August 25. Click on it, and here we have it. So we've got these 5 bear spread strategies. Top row 313 feeder cattle. This one I'm recommending we cancel. We'll go over that. Next 3 are live cattle, nat gas, and soft red winter wheat, Chicago wheat. And then the new one to introduce on the bottom row here is number 319. It is a bear spread in soy meal futures. So we'll look at that one also. All right, so let's hop on over to it and take a look at the charts. Get rid of that for you. And we'll take it one by one. First of all, the one we're canceling is the feeder cattle. And up until a couple weeks ago, this thing still looked good, meaning there was still the probability of the market rallying up to our entry levels, 1 or 2, and then falling back on down. We're not even about halfway through this seasonal window, but walking it forward as of yesterday, I don't really see much chance. There's a slim chance of getting to level 1, unlikely chance of getting to level 2, and then on top of that, really walking it forward, the risk reward gets skewed and the probabilities get skewed where there's not a prevalence of the probability of making money, at least at this point. So if we were already short, we'd stick with it, looking for, maybe some kind of move against us before it pushed on down further. But that's not our scenario. So no fill, and I am recommending that we cancel this one. We'll look for another opportunity in feeder cattle down the road. Okay. Then we've got the fat cattle. Now, as I've mentioned before, the original stop would have been elected at negative 87. So anybody who stuck with that, no problem. Even though this thing has worked its way lower, got to define your risk. So I completely understand. If you got out because you wanted to keep the math and the risk well defined. And that acknowledged, I did follow up with walking this forward, and I did mention that there was a probability of the market stalling in around the time frame it did and then pushing on down. So if you wanted to stick with it, obviously you'd have to expand your risks, so totally trader's prerogative, but there was that probability, and so far that has worked out. So I'm going to blow this up a little bit here. So I've already talked about this triangle that this thing had formed in the first few weeks or so, and then the market rallied through the top end of this downtrending resistance line in this triangle. Okay, but then it completely stalled. It ran out of steam. So it tried to explore what was up here, pushed into new highs. Okay, so I had enough power to push into new highs. But then it completely failed. So I'm going to move this out just to get rid of that cloudiness there. So we had this breakout. It was a failed breakout to the upside coming out of the triangle. Now it's pretty much followed along with the normal tendency around this time of year like I was mentioning. So adding the extra risk in this case with this particular spread has actually worked out. It's not always going to work out. Sometimes you're going to take more heat than you originally wanted. Sometimes you're going to take a bigger loss than you originally wanted. So it's always trader's prerogative. But being that things were lining up this way, I thought I mentioned it and I stuck with this. So pushing down, things are looking good. So now we're sitting in a positive level for the more aggressive or the less aggressive average or less aggressive entry level 2 type trader. Okay, more conservative, I should say. And then right now we're sitting about break even for those who got in right about the entry level 1 and the entry level 2, right at about negative 172 or so. So everything's going according to plan in terms of how things are lining up with the particular strategy, and we'll just see what happens. So got a little push to the downside today into new swing lows. Took out this low a few days ago, and this white line is forming, so we've got enough data now in terms of the bars to come up with the 200 period moving average, and that's what that white line is forming right there. So you might see a little support coming in around the negative 180 to 190 level. Also, I've got this little rectangle right here, so it says between 9.6 and 9.10. There's a little cluster of best dates. Where at some point during the seasonal window, this particular window between 9.6 and 9.10 had a gain of around 260 to 430, and that turned out to be the best in those years. So relative to, I think it was the 20th, that would be about where in this box the gains would be best in years past in this between 9.6 and 9.10 window. So a bit of a cluster is all I'm trying to say. So we'll see if the market kind of falls down, hits the 200, probably pushes up, and then rotates back down, and maybe we can get the bottom end of this. All right, so that is that. So currently we've got no change to the revised strategy, and the only revision was to lift the stop and see how things traded. I might go ahead and put that stop back in, but for right now, still have it out, and I'll let you know if we should put it back in. And then everything's kind of going according to plan at the moment. So currently sitting with some level of unrealized gain for the more conservative entry level 2 traders, about break even for the more aggressive average in traders. And we just need this thing to continue working for us and push on down. These targets certainly may come up a bit. I'm going to do some work over the weekend, see if they need to be pulled up. But for right now, we're just going to leave them where they're at. Okay, with a special note that during this window of 9.6 to 9.10, this wouldn't be a bad place to think about covering at least a portion of the position. All right, we'll see how that plays out. I mean, obviously, the market could just tank over the next few days, which would really take out these levels, but that doesn't mean you get out there. We're still sticking for target 1 and target 2. We'll just see over time, probably be about 3 weeks till we get there, if those seem to be, that cluster seems to be looking to hold, and maybe we get out there. Okay, so that is the live cattle spread. Then we've got natty gas. Okay, so all's going according to plan here. Both are in. Both are sitting with some level of unrealized gain. The market yesterday pushed into a decent little low here. Needs to really come down a little bit more. I see support around negative 295. Got pretty close to that actually. And then the next level would be this low, which would be negative 300. So maybe today's a bit of short covering, and then we can resume the trend to the downside. We got our targets at negative 312 and negative 323. So basically, both levels filled, no change to the strategy. We'll see what happens. I mean, no change to the revised strategy. So you can tell right here I revised it on 8.9. Okay, so that's that strategy. And then we've okay, there's at least a couple weeks left in this one. We'll have to get through Labor Day. Market's basically been moving sideways. Got filled today at entry level 1, which was negative 11.5. Actually, we got filled a few days ago too. Level 2 is not filled yet, and if you got filled at negative 11.5, you're sitting at about break even. And what we want this thing to do now is to break on down to our targets. First target's pretty close. It's only a penny and a half away. Give a gain of $75. But maybe if it really has some good momentum and starts taking out, the 12 and 3/4 level, with some good volume, maybe that'll mean we can get down to these next two levels, negative 14 quarter and negative 16 quarter. So we'll take them one by one. All right, so that is the wheat spread. So that one is no change, and level 1 traders are filled. Kind of just moving sideways at the moment. And the last one is a new one to introduce. Margin requirement will be on PDF. I don't have it on here. I think it was 550. Don't quote me on that. All right, so number 319, soy meal, long December, short October. Risk reward, regular entry traders risking 220 to either make 400 or 460. More aggressive average in traders risking 560 per two lot that you average into to either make 680 or 800. If all you do is get the first level, the gain would be 270 at the target one. And we are looking to get shorts from price improvement both levels. So level 1, we're looking to get short at -8. Level 2, we're looking to get short at +5. Stop is up at 27. And then our target's at -35, -41, -56. So we just need this thing to push up, make a new swing high because it'll take out this high here, and then rotate back to the downside. All right, so that is strategy number 319, bear spread in soy meal. Okay, so we canceled the feeder cattle. Live cattle is working out so far for those who pulled the stop and were willing to take on the additional risk. Natty gas is working its way lower in our favor, so that's a good thing. And then we've got the the wheat spread, which just got filled today, sitting at about steady. This one's got a couple weeks left to go. And then we got the soy meal one that I just introduced. So that should bring everything up to speed. If you have any questions, comments, anything of interest, feel free to let me know. I'm going to leave it there. Hope you guys have a great weekend set up for yourselves. And thanks so much for watching.